Right now, there is $202.90 disappearing out of your Social Security check every single month, and there is a good chance you don't have to let that happen. Heads up, this is general information, not personal financial advice, and every number I give you today comes straight from federal guidelines for 2026. Now let's get into the first one, because this one alone could put almost $2,500 a year back in your pocket. Here's the setup. If you are on Medicare, that $202.90 is your Part B premium, and it comes out of your Social Security deposit automatically before the money ever reaches your bank account. Most people just accept it. They assume it's a fixed cost of being on Medicare, like a subscription fee you can't cancel. They see the smaller deposit every month and they shrug. But here's what almost nobody tells them. There are federal programs run through your state that will pay that premium for you. Not reduce it, pay it in full every single month for as long as you qualify. And depending on which version of the program you fall into, it can go even further than the premium and start wiping out your deductibles and your copays too. I want to walk you through exactly how this works, who actually qualifies using the real 2026 numbers, and the specific mistake that causes thousands of retirees to talk themselves out of money that already belongs to them. Where does this come from? These are called Medicare Savings Programs, and they're built into federal Medicaid law, administered state by state, but governed by national income thresholds tied to the federal poverty level. The Centers for Medicare and Medicaid Services, or CMS, updates these thresholds every year. There's also Supplemental Security Income, SSI, which comes straight from the Social Security Act, and the Low-Income Home Energy Assistance Program, LIHEAP, which is funded through the Department of Health and Human Services. None of these are obscure or experimental. They've existed for decades. They just don't advertise themselves, and that's the whole reason this video exists. Let's go through this piece by piece, starting with the Medicare side, because there are actually 3 tiers here, and people almost always assume they only qualify for the smallest one, if any. Number 1. The Qualified Medicare Beneficiary Program, QMB, is the most generous tier. And for 2026, it covers a single person with a monthly income at or below $1,350, or a married couple at or below $1,824. If you fall under that line, QMB doesn't just pay your Part B premium, it pays your Part A premium too, if you have one, and it wipes out your deductibles, your coinsurance, and your copays across the board. Here's the dollar impact. That's the $202.90 a month, or $2,434.80 a year. Plus, federal law actually prohibits any Medicare provider from billing a QMB enrollee for that cost sharing at all. So if you've been paying a copay every time you see a specialist and you qualify for QMB, that bill should never have come to you in the first place. The resource limit sits at $9,950 for an individual and $14,910 for a couple. And your home and one vehicle don't count toward that at all. Picture a 71-year-old widow living on $1,100 a month in Social Security. She assumed a program with low income in the name couldn't possibly be for her because she wasn't poor, just careful. She was nearly $400 under the QMB line and never knew it. The most common mistake here is assuming your income is too high without ever actually checking the real number against your actual countable income, which is often lower than your gross Social Security check once certain deductions apply. Now here's where it gets important, because if you're a little over that QMB line, you are not out of options. Number 2, the Specified Low-Income Medicare Beneficiary Program, SLMB, kicks in for people who earn a bit more. For 2026, that's up to $1,616 a month for an individual, or $2,184 for a couple. SLMB doesn't touch your deductibles or copays, but it pays your Part B premium in full. That's still $202.90 back in your check every month, no different in dollar terms than the QMB premium coverage, just without the extra cost-sharing protection. Most people stop here and think, if I don't qualify for the big one, there's nothing left for me. That single assumption is the most expensive sentence in this entire topic, because the next tier exists specifically for people in that exact spot. Number 3, the Qualifying Individual Program, QI, reaches even further, up to $1,816 a month for an individual, or $2,455 for a couple. Same benefit as SLMB, the full Part B premium covered, so that same $2,434 and change back annually. Here's the part they never tell you. QI is funded through a capped federal grant, which means it runs on a first-come, first-served basis each year. If you think you might fall into this range, the mistake is waiting until next tax season to look into it. By the time you apply, that year's QI funding in your state may already be spent, and you'd have to wait for the next cycle. Now, one more piece connects all three of these, and it's the part almost nobody mentions. If you're approved for any Medicare Savings Program, QMB, SLMB, or QI, you are automatically enrolled in something called Extra Help, which covers a big chunk of your Part D prescription drug costs. You don't file a second application. It happens because the first one went through. So the dollar impact of one approval letter can end up touching two completely separate bills, your medical premium and your prescription costs. Here's the part they never tell you about how to actually check your number. Your countable income for these programs is not simply your gross Social Security benefit. There's a standard $20 general income disregard applied automatically, and if you're still working, even part-time, a chunk of that earned income gets excluded too. That's exactly why so many people who eyeball their bank statement and say, "I make too much," turn out to be wrong when someone actually runs the calculation using the real formula instead of a rough guess. Now let's talk about the second benefit, because this one hits a bill that spikes twice a year and quietly drains a fixed income, both in January and again in July. Number 4. The Low-Income Home Energy Assistance Program, LIHEAP, is a federally funded, state-administered program that helps pay your heating and cooling costs. Most states set the income ceiling around 150% of the federal poverty level, though several states use up to 60% of their state median income instead, which is often a higher, more generous line. For a one-person household, that can put the monthly income ceiling anywhere from around $2,000 up to over $3,000, depending entirely on your state. So this is one where the exact number genuinely depends on your zip code. The benefit itself typically ranges from $200 up to around $1,000 a year, paid directly to your utility company, and in some states with higher funding levels, average benefits run even higher than that. On top of the regular benefit, there's a separate crisis fund, usually worth several $100s more, specifically for situations where your heat or air conditioning has actually been shut off or your equipment has failed. Here's what most retirees miss. This program covers both heating and cooling, not just winter. For an older adult, air conditioning in a summer heat wave isn't comfort, it's a safety issue, and that cooling assistance exists precisely for that reason. The other mistake people make is assuming that accepting this help somehow reduces their Social Security or counts against them as income elsewhere. It does not. It's a grant, not a loan, and it doesn't touch your benefit calculation anywhere else. Picture a retired couple stretching a fixed pension and two modest Social Security checks, rationing their thermostat every winter because the gas bill always came first. A single application connected them with a payment straight to their utility provider, plus a repair grant that fixed a furnace that had been failing for 2 winters straight. Nothing about their income changed. Somebody just told them the door was open. Now here's the third piece, and for a lot of you watching, this is the one that changes the math the most, because it isn't a discount on a bill, it's an entirely separate monthly payment. Number 5. Supplemental Security Income, SSI, is a completely different program from Social Security retirement benefits, even though the Social Security Administration runs both. SSI exists for people who are 65 or older or blind or disabled, with limited income and limited resources. For 2026, following the annual cost of living adjustment that took effect January 1st, the federal benefit rate is $994 a month for an individual and $1,491 a month for a couple. Here's the mistake that costs people the most money on this entire list. Assuming that because you already collect a Social Security check, you're automatically disqualified from SSI. That is false. If your Social Security benefit is modest, SSI can supplement it up to that federal maximum. Your SSI amount gets reduced by part of your other income, but a reduced payment is still real money landing in your account every single month. And over a year, that can add up to thousands of dollars you are not currently collecting. Number 6. The resource test for SSI looks at what you own, not what you earn. And the limit is $2,000 for an individual or $3,000 for a couple. That sounds strict, and it is, but here's what people miss every time. The home you live in does not count toward that limit, and in most cases, one vehicle doesn't count either. Someone who owns their home outright and has modest savings can still fall well within these resource limits, even though on paper, homeowner sounds like the opposite of someone who'd qualify for a needs-based program. Don't rule yourself out over home equity before you actually run the numbers. Now here's where it gets important for anyone who tried this before and gave up. Number 7. Every one of these thresholds moves annually with inflation. The 2026 cost of living adjustment changed the SSI federal benefit rate. It changed the Medicare Savings Program income limits, and it changed the Part B premium itself. That means if you checked 2 or 3 years ago and got told you were $50 over the line, that line has since moved, in most cases upward, which means people who were just barely excluded before can be comfortably inside the window this year without a single thing in their own life changing. The mistake here isn't applying and getting denied. The mistake is treating that old denial as permanent and never checking again. Number 8, and this is the one that ties everything together financially. If you stack these correctly, the numbers aren't small. A Medicare Savings Program approval can mean $2,434.80 a year back in your Social Security check, plus extra help savings on your prescriptions. LIHEAP can mean another few $100s, sometimes close to $1,000, paid straight to your utility. And SSI, for the right household, can mean up to $11,928 a year for an individual, or partial amounts in between that still add up to real money every month. None of these 3 programs cancel each other out. You can, in many cases, qualify for more than one at the same time. And the most expensive mistake in this entire video is assuming that qualifying for one thing means you've already found everything you're owed. Here's your one action step for this week. Call your state health insurance assistance program, known as SHIP, which offers free, unbiased help checking your eligibility for every Medicare Savings Program tier. And while you're on the phone, ask them to point you toward your state's LIHEAP office for energy assistance. Then, separately, contact your local Social Security office or go to ssa.gov and specifically ask whether your income and resources fall under the current SSI federal benefit rate. All 3 of these are free to apply for. Nobody who works for these programs will ever call you first and ask for your Social Security number or your bank account information to release a benefit. If that happens, hang up, because that's a scam, not the government. You go to them using the ssa.gov website or your local SHIP office directly, never the other way around. If this saved you even one of these 3, that's the whole point of this channel, finding the rules that already exist in your favor and putting them in plain English so you actually use them. Subscribe if you want more of this, because next week I'm breaking down exactly how the new senior bonus deduction under the One Big Beautiful Bill Act changes what you owe the IRS this filing season. And that one affects almost everyone watching this video.